All right. Good afternoon, everyone. Welcome to this TradeStation webinar. My name is Jesus Nava. I'm the Director of Client Training and Education for TradeStation Securities. We have the pleasure of having a guest speaker, Brandon Wendell. He's been with us many times before, and we're glad to have him here. He's a trader and educator and has years of experience trading options and futures and everything that can be traded. We'll pass the microphone over to him in just a moment. Let me just go over some of the introductions of this class. The title of this presentation is Plan to Trade, Trade the Plan, Strategic Options Execution. Sometimes there's a very fine line between consistent profits and frustrating losses. And sometimes that's just the lack of a very well-structured plan. Brandon is going to go into the details as to why a trading plan is necessary and what you can do to have a very well-structured plan for success. Before we go into the details of this presentation, let's go through some of the disclosures. Every symbol and idea that we talk about here today is for educational purposes. These are not recommendations of TradeStation, and also that active trading is not suitable for everyone, especially when it comes to trading options, which carry a high degree of risk. Past historical performance is no guarantee of future results. And although it's a pleasure to have Brandon here with us, Brandon is not affiliated with TradeStation, so his ideas and education are his own. But Brandon, it's great to have you. I'm going to pass the microphone over to him and also the screen share. Let me just stop my screen here for a moment. And Brandon, the floor is all yours. And we cannot hear you, Brandon. And by the way, as you fix your audio, the chat is open. So make sure that you submit any questions or any comments in the chat. I am going to be sharing some links in the chat as well to some of the worksheets and some of the information that Brandon is going to be sharing with you today. So yes, Brandon, your turn.
Hopefully you can hear me now.
I can hear you now. Yes, thank you.
Excellent. Okay. All right. I'm going to go ahead and share my screen. So you should be able to see that and see me just a little bit warm today. I'll go ahead and introduce myself. As Jesus mentioned, I am not an employee or work for TradeStation. I'm just invited here to be able to talk to you about trading, which is what I do. I'm a full-time trader, and I basically got started in the markets as a retail broker many years ago. And I went from front end to back end, where I became a trader for the brokerage. And from there, I became a trader for a hedge fund, a private hedge fund, and did pretty well, but got burnt out. Hedge fund trading is very stressful, so I decided to just become a trader for myself. And then I started getting into education and realized that it really helped me to stay disciplined by helping others with their own trading as well. So I really enjoy doing that. I trade full time. I teach part-time, if you will. And like I said, that's kind of my story. I focus primarily on options and futures trading. So that's why TradeStation invited me to talk to you a little bit about the options trading and kind of organizing or building discipline in your trading. A lot of people start trading and they don't really have a lot of consistency. And that's a key thing. You need to have consistency if you're going to be successful in trading. So what we're going to talk about are some of the tools that you can have to help you become more consistent. It's no guarantee it's going to make you successful, but it should hopefully make you more consistent, which, if you're doing things right, should make you successful and profitable. But again, there's never any guarantees. We're going to talk about why a lot of traders fail and how planning things out actually changes everything, makes it so much, I would call it easier, actually. It does make it easier to figure out what you're supposed to be doing and when you're supposed to be doing it, and how to do it properly. We'll talk about the trading business plan, and there's actually two types of plans that we're going to discuss. And if it's not up yet, I know it'll be up very soon. There is, in the Options Education Center for TradeStation, there's going to be the plans, a skeleton interactive worksheet that you can create your own plan. So I'll be going over that today and showing you how it works. Let's see, I'm just going to tradestation.com on my browser real quick, and basically, you'll also find this webinar as well as others there as well. So if you go to tradestation.com, you go to Learn and Options Education. And as you scroll down, you'll see the different articles and webinars and everything that we've been doing. There's also the Options Replay workshop that happens on a regular basis to talk about different strategies and how to employ them in OptionStation Pro. And then again, you've got the webinars, and this will be available for reviewing as much as you'd like on this particular page as well. And I think, oh yeah, there it is. Like I said, Jesus actually posted the link. So you'll be able to go ahead and click that link, and there it is, why every options trader needs a written plan. So there we go. All right. And where was I here? So we're going to talk about not just the business plan, which again is a generalized plan of how you will run your trading business, but we'll talk about what's called the market opportunity plan. And the market opportunity plan, a lot of people try to skip this. They think it's time consuming, but it can be very beneficial to help you understand what you're doing right. And more importantly, what you're doing wrong and how to improve it on individual strategies that you're employing in the markets, basically individual trades. When I trade, win or lose, I want to go back and analyze what did I do and how can I become better? I've been trading for over 25 years and I still know that I can improve. I still know that I can make things better. We never stop. And if you do, well, that's when you get into trouble. As I said, I'm going to do a demonstration of the worksheets and show you how you can use them so you can use them for yourself. But basically, trading plans matter. This is not gambling. When you go to a casino or you play the lottery, that's gambling. Your odds are terrible. You can improve odds, perhaps. Maybe you count some cards. I don't know what anything else you could possibly do. Overall, a lot of individual traders do lose money over time. And we don't want to be one of those types of traders. Obviously, we don't get into this industry to lose money. We get into it to make money, either for income or building wealth. The reason why that many of them fail, or more importantly, we want to mimic the ones who are successful, right? In any industry that you get into, for the most part, you find someone who is very successful in what you're trying to do, and hopefully they can mentor you, or if not, you can see what they're doing and try to mimic them. And that's what we need to do. The 10 to 20% aren't necessarily smarter or luckier. They basically plan. I'm trying to remember, there's a book years ago. It was Jack Schwager, I think, was the author of the book. And basically, it was a bunch of interviews. And he interviewed many traders. And one of the common themes that was in that book, honestly, is from like 25, 30 years ago almost. It'll come to me later. But the common theme was planning. The traders who were very successful had trading plans. They built that consistency. Trading, it's not a get-rich-quick scheme. What we want to do, again, is build consistency. And if we're doing the right thing, we should have that consistency and consistent profits. Not necessarily huge. Obviously, we'd love those big wins, but they don't come all that often, just every now and then. But in order to be consistent, you have to have a set of rules and structure, basically doing the right thing over and over again when you're supposed to. So we should really write these rules into a plan. It's very easy if you have it, oh no, I've got it in my head. I know exactly what I'm supposed to do. When you have that, it's very easy to violate it. When you start writing down a plan, either handwritten or on a computer, most likely, now you have a little bit of accountability. You've put it out there. Even more, if you wanted to, you could share with a significant other or a trading partner or a friend or a mentor. You're building accountability to make sure you follow the plan. Ah, yes. Thank you, Alan. Market Wizards. There it was. Thank you so much. Yeah, I don't remember when it was published, probably in 2000 or maybe even earlier, but that was the one. Yes, thank you. So again, people fail a lot of times because they're overconfident, excuse me. One of the worst things that could happen is when you first start trading, you get a bunch of nice little winners or even big winners. After we start winning, we start to think we can do no wrong. We start to think, oh, this is easy. I'm good. I'm making money. This is a piece of cake. And then you start risking more. When you start risking more, you're taking on bigger potential losses. And we should only be taking on bigger potential losses when we are comfortable with that. And what I mean by that is potentially having a larger account size to basically afford the drawdowns and the experience level. We need both of those. Oops. Another one is loss aversion. Nobody likes to lose, right? Let's face it, we don't like to lose, but we have to admit when we're wrong. And it's very hard sometimes as a trader. We chose that particular security, we chose that direction, that particular asset to trade, and we don't want to be told we're wrong. Or it'll come back. If I don't take the loss right now, I'm sure it'll come back later. I'm sure nobody else has ever said that, just me. Yeah. And the other problem is a lot of times when we do have a win, we're scared and we exit too quickly. We need some big winners. Basically, there's only 4 outcomes to a trade. You can have maybe 5. You have no gain, basically break even. You have a big loss, small win, big win, right? If we can eliminate that big loss, the small and big wins will take care of our small losses. But a lot of times, what happens with traders is we take those big losses and it wipes out a lot of the work that we've done. And we're afraid to take big winners when things are going really well in our favor. And we lock in small profits, and therefore we don't have that cushion that we could have had we had the big win. A lot of times, this is psychological. Trading it's one of the hardest things to realize about trading is you're not necessarily combating what's on your screen, you're combating what's going on in here. This is hugely psychological. It really is. Obviously, we're doing things to analyze the markets, analyze the economy, the government, the situation that's going on around the world, and what's going on with our companies that we're trading. But we're also, in a way, we're combating ourselves and figuring out how can we overcome our fear, or we get stuck in old information, believing that the market is the same that it was when we first got into the position. We need to focus on what's happening now. I used to get a lot of people coming up to me and saying, Brandon, I'm in this position right now. It's losing. What should I do? And a lot of times, one of the first things I'll tell them is, would you take that same position now? What's going on in the market? What does this look like? Would you take it now? And if the answer is no, then why are you still in? Conditions have obviously changed. We need to change with it. So a trading plan is kind of like a circuit breaker for your emotions. The plan keeps you on your path and allows you to focus and, again, build that consistency, doing the same thing over and over again. If it's wrong, we have our plan. We can look at it, figure out what is wrong, and fix it. If we don't know what we're doing and doing whatever comes to mind, we have no idea where our errors are and how to fix them. So I mentioned it's a kind of a two-tier approach when it comes to trading plans. Basically, we have the trading business plan, which is overall how you are running your trading. And then there's the market opportunity plan. And again, I'm going to go over those two with you. Yes, there's going to be an Excel trade tool available. Absolutely. I'll show you. Okay. I'm going to get into some OptionsStation Pro. Absolutely. And of course, if you're looking for executions on OptionsStation Pro, the options replay that we do on a regular basis definitely goes into that as well. But yes, I'm going to be getting into that. I have it open. Anyway, the trading plan is like your foundation of your house. That's the overall plan. Again, it determines your operations, how you are going to handle and what risk you will take, and how you measure your success. How do you know if you're on the right path and doing the right thing? The market opportunity plan are the individual rooms, which are more specific. They're going to be going over individual strategies like straddles or iron condors. It's a particular purpose that you're trying to employ to profit from what's going on in the market. And again, if we follow plans and we have everything structured a bit more, we're going to have potentially a better results. Again, I can't say we're going to have more success because there's no guarantees. Things happen. I had a trade, I'm trying to remember what it was on earlier today, that everything looked perfect. The market would look perfect. It just didn't work. We got stopped out. And that is actually a good trade. It's not one I would prefer to have, but a small loss with the amount that I was willing to risk is actually a good trade. I followed the plan. So don't skip. Okay. A lot of people just start picking trades and they want to use the market opportunity plan without building a foundation. You can't build an upper floor without the foundation in the first floor. So it really, you should take this seriously. And let's see. Yeah, like I said, in the option, the website that Jesus put in for the link, you can go ahead and download the plans. Those are the Excel spreadsheets that we're talking about. So you'll see a little bit more of that as I go through it today and how they work. So again, diving into the business plan, you're starting off with an overall options business trading plan, or options trading business plan, as that is called right there. I said it incorrectly. We decide how much capital we're actually going to employ, what kind of returns are we looking for, and you can even go into your schedule to make sure that you have a routine that you follow to ensure that you're doing, again, your plan and doing the right exercises at the right time. And yes, it does include Saturday and Sunday if you want to do some research. The markets are closed potentially, although if you're doing futures, they are open on Sunday. But you can do some research and analysis and get ready for the week as well. Oops, there you go. So as I said, this first part, and actually, where is that sheet? Nope, wrong one. There it is. So this is the worksheet that I've been referencing. And there we go, options trading business plan. And again, you can put in the type of capital you're using. Maybe you're using $35,000. Again, it's whatever you decide. And how much are you looking for as a monthly return? It'll automatically calculate some things for you as well. So perhaps I'm looking for, I don't know, 7% return monthly, 84% annual on my money. Now, you may not end up putting all of your money to use. And the nice thing about this is in the worksheet, there's also instructions to help you. These are just some guidelines and suggestions. If you want to follow them, great. If you don't want to, you can put in your own. For instance, where is it? Position sizing guidelines. Yeah, you can decide how much you are going to risk on any one single position. 1 to 5% of your total account value, perhaps. If you're very conservative, you might stick to 1 to 2% of your capital. That means when I'm putting on an individual trade, let's see, where is it here? Position guideline. So let's say I'm going to be conservative and say 2%. That means for every position I'm looking to take, even though I have more capital to do it, I should not risk or put in, not risk, sorry, that's different. I should not utilize more than $700. Now, that may limit some of the strategies I can get into. I may not be able to do some of the credit strategies depending on the margin, and maybe even some debit strategies. I might have to adjust strike prices or time to make sure that I'm not using more than that amount of capital in each individual trade. If I'm a little more aggressive, wrong one, I think it says, right here, more conservative, 1 to 2%. If you're having more risk tolerance and you've got more experience in trading, might go up over 5%. Typically, if you're above 5% risk, or not risk, excuse me, again, 5% capital employed per trade, that is seen as a little bit riskier. And it says many professional options traders recommend keeping your total capital at risk across all of your positions below 20%. And actually got cut off there. I apologize. I'll have to fix that. Can't see the end of the comment there. So again, just because I have the capital available doesn't mean I need to use all that money for every position. If I'm a little more aggressive, again, I can put in 5% that I'm willing to use per position. So if I'm doing a bull call spread, that's a debit spread, I should not use more than $1,700 for the premium I'm purchasing. So again, a common guideline, I already went over that. You don't want to have a catastrophe. If you have a bunch of losses, you don't want to risk too much of your capital. You need to have some in reserve so you can continue to battle, so you can continue to trade. If you put in too much capital, if you end up losing, if something bad happens, there's a huge shift in the markets, you may not be left with enough capital to still keep your account open and trade actively. And there it is. It should be between 20 and 25% of your account. That means you should not use more than 20 to 25% of your entire account size active in the markets. Just don't want to use all your margin that you have available, or in this case, all the cash you happen to have available. It's just not necessarily wise in case something happens. You can put in your loss limits in the box as well, and you can do it per dollar or percent per trade. Oops. Again, I can go back to the worksheet, and I said I'm going to be using no more than 5% of my capital for any one trade, and I'm willing to risk, let's say, maybe 2%. It automatically calculates $700 for my risk per trade. And then the next one is, how much are you willing to lose per day? Remember, we may have multiple positions. So if we don't want to have more than, let's say, a 6% drawdown, we're risking 2% per trade. Obviously, we shouldn't have more than 3 positions open at the same time. And then we can see how quickly that can draw down. If we're risking $700 per trade daily, 6% is $2,100. Weekly, $10,500. That's a third. Over, wow, over a third, isn't it? And then monthly, we would be wiped out before the end of the month. That's why it's important to risk very small amounts of your capital on any one trade and overall as well. I believe in the instructions, it also helps you again with some of the suggestions as what to use. Also, strategy diversification. We don't necessarily want to go all in one direction in the markets. You can do a mix of bullish and bearish strategies. Sectors of the market move in different directions. Industries move in different directions. And some might be bullish, some might be bearish, some might be moving with the broad market, some might be moving against. You can even mix credit and debit strategies based on certain criteria. Also, again, you can diversify. You've heard diversification, I'm sure, in the markets. A lot of people talk about that in protecting your portfolio or creating a portfolio for investing. People always talk about make sure you diversify your portfolio to protect yourself. We can do the same when it comes to our trades. We can do mid cap, large cap, again, alternate a lot of different things, look at different industries, different sectors, even trade indexes versus stocks and ETFs. And we can alternate. And the nice thing is with TradeStation, where is it here? There it is. We can create radar screens. You see, I need to open up an options. No, that's not what I wanted. Workspaces, open. There we go. We have the radar screen where we can actually search for different volatility levels. So let's say I'm looking at, I'll just do bull call spreads worksheet. Workspace. These workspaces are also available in the Options Education Center, just so you know. There we go. And while that's opening, I'm going to close the other one, keep the computer running smoothly. Hopefully. Oh, come on. I just want to close this workspace. There we go. And reopen this one. So probably taking too much time for this, but what I was saying is basically you can go in and create workspaces or scans for different things. I can go into data, add new page, hot lists. And in those hot lists, it's going to price first. But in the drop-down menu under activity, I can close that and open up volatility lists and search for high or low volatility. Therefore, I can alternate between different strategies and different levels of volatility. Again, diversify the trades as well as the portfolio. And you can also diversify time using short-term and long-term trades. Again, try to mix it up a little bit so you're not all in on one strategy, one direction, one asset. Spread out the risk. So yeah, it should be Black Swan event planning. Black Swan events are these things that happen. Nobody identified that it was likely to happen, something that's just out of the blue. They're pretty rare, fortunately, but they have an extreme impact on the markets. And if we maintain the proper position sizing where we're not risking more capital than we should, then we're protecting ourselves against a Black Swan event. I said before, and you saw in the worksheet, your money can be lost very quickly if you risk too much. This was less than a month with only 6% max loss per day. If I drop it down to 3%, we're still fighting after a month if we had that bad of a trade or trading session, basically. If we maintain a small portfolio risk of under 20 to 25% of our entire capital, if something were to happen and every single trade, every single position we had was lost, wiped out, hit stops, whatever it was, we still have money to be able to trade. And again, we can also use defined risk strategies where we're limiting the amount of risk rather than using unlimited risk. Most traders, it depends on what level of trader you are. There's 1 through 5. If you're using most strategies that are very popular, and again, if I go back to the Options Education Center on this page, synthetics, those are very risky. That's level 5. But most of the positions that many people are using, strangles, calendars, condors, butterflies, those are, I believe, level 3 and lower, and they have defined risk, meaning you can't lose more than a certain amount. You see how the risk profile flattens out. And that's another way of protecting ourselves against those Black Swan events. Another thing I mentioned before, trading is very psychological, and you got to protect against yourself. List your current options trading experience and where you're approved right now. If you're looking to improve your skills and your level, figure out what you're going to do to get there. A lot of times it may just be amount of capital and experience, basically years in the markets. Figure out what you're missing as far as your gaps in your knowledge. Perhaps there's a certain strategy that you've heard of, but you don't really know. You might want to try it. Again, in the Options Education Center, there's a lot of different strategies you can try out and take a look at, see how they work. Somebody told me once, one of my mentors told me a while ago, basically list out your personal strengths and weaknesses and figure out what's going to help you with your trading. My mentor then said to me, focus on your strengths. When you hit a plateau where you're not doing very well in your trading and you're trying to figure out what you're missing and trying to get to the next level, break that sheet out again, look at the weaknesses, and one of those is probably holding you back. Figure out what it is and try to figure out how to overcome it. And it worked. It helped me. And again, figuring out who you are and what's going to help you to become better, what's going to hold you back, and working on those things can make you a better trader. can make you a better person. I actually put that in the slides about the plateau again. Where is the rest of your money if it's not in the market? It may just be in your account. Obviously, it's not gaining anything, but this is discretionary money typically when you're looking at trading. I'm not talking about your investment portfolio. I'm talking about your trading portfolio. So active capital. Again, things are going to happen. You are going to be taking losses. So while you may start out with a certain amount of money, hopefully it grows, but at times there may be things that draw down. Most of all traders go through a period of drawdown. Hopefully it doesn't last very long and it doesn't wipe you out. But if we hold back a little bit, then we can protect ourselves. You could try to invest in other things, but then it's still at risk at that point. If it's in cash, obviously cash has its own risk, but not necessarily as much as an investment that you might have. Now, when it comes to your market, basically figure out your approach. What are you going to be doing? Are you using technical analysis? Are you using certain tools? Are you using certain strategies you read about? Figure out what it is you're going to be using and how you're going to employ them, how they're going to help you. One of the things you want to do is try to keep as few things on your chart as possible. I see a lot of traders with tons of squiggly lines everywhere, tons of indicators, and they have no idea what price is doing. Be careful. There's paralysis by analysis where we get too much on the screen going on and we don't realize what's actually important. And that's really price. But figure out your settings and how you're interpreting signals. I don't actually have that data, Lance. I'm sorry. TradeStation might, but I don't personally. And it would just be, you wouldn't be able to check every single trader out there. You'd only be able to see the individual traders for that particular brokerage. As I was saying, with the technical analysis, again, figure out what constitutes a trend, what constitutes a possible trend change or stalling. Where would you buy? Where would you sell based on signals? What are your signals you want to use? Same thing with your fundamental analysis. How are you going to be doing your analysis on a particular security that you wish to trade? The steps, any websites you might have, how are you going to use them? How do they benefit you? Because you'll find sometimes a website that might have been useful for a while is no longer useful. You need to get rid of it. You may not need to use it anymore. And every single type of trade you're looking at, depending on the type of strategy, again, it could be butterflies, it could be bull call spreads, bear put spreads, whatever it is. List how you are going to decide that is the right strategy to employ on that particular security. And basically, what are the gauges to let you know this is the type of trade I should be using here? These are the conditions that would trigger an entry. How am I going to manage my open position? What would you do? How are you going to book profits? Is there certain, for me, when I'm managing a position, when a certain thing happens, I typically move my stop to break even, and then I manage my position based on a certain amount of criteria. So that way I don't give back profits. I try to keep profits. Sometimes it burns me because I might be stopping out too soon, but overall it works well. And I have it written down in my plan, all detailed, exactly how I'm managing my positions, and the different types of positions call for different types of management. So basically, if you write out how you're going to execute trades, again, finding the trades with the analysis and then executing the trades, knowing when it's time to get in, when it's time to get out. Yeah, we're going to go into a few strategies. We're going to look at the next worksheet. This is just the business plan one, the overall start, the foundation. Sorry, battling allergies and heat. This is always fun. So tools and resources, again, you may just want to list certain tools that you use on a regular basis. I used to have a list of, I think it was like 60 different websites that I would use for individual pieces of knowledge. And after a while, I narrowed it down. I realized, wow, I don't use this one that often. I don't really need this one so often. But you might end up finding some new sources you can use, or you might realize that you don't necessarily need a particular source. At what point do I typically shift my stop loss to break even? It depends on the trade. For instance, I do a lot of futures trading. I usually do it once my price is halfway to my first target, and then I use a certain stop loss level. With options, it's going to be different. Okay. So it just depends on what it is you're trading. So if you're going to be using certain platforms, TradeStation, OptionStation Pro, TradeStation Futures Plus, if you're trading options on futures, what are you using? Are you using any kind of tax management or portfolio tracking software, and how will you use that? There are some out there. I mentioned that the learning never stops. You can always improve no matter what you've been doing, how well you've been trading. There's always a way to get better at it. So figure out where are the resources. And again, there's a lot of resources at TradeStation, and it's growing in the Options Education Centers, new pieces being added all the time. to expand your knowledge when it comes to trading options. Again, looking at, where was it here? You go to events. I guess I could have stayed on this page. Go back. Under the Options Education Center, you have options. Oops, sorry, skipped it. Options replay. So there's the webinars that are coming up. There are previous webinars, and each one focuses on employing certain strategies. So right here, building and comparing bearish option strategies. So we have multi-leg option strategies. How do you control your risk? So there's a lot of different resources there to help you out. KDJ indicator, I have no idea. Stochastics are fine. The problem with a lot of technical indicators is that they're all based on closing prices. So they typically will not confirm signals until the current candle that you're on closes. So you have to be aware of that and use them properly. Where can you go for help? Do you have a mentor that can help you with your education? Find someone if you can, if you don't know. There's plenty of places out there. And I mentioned I do education. I'm not saying you have to go to me, but there's plenty of places out there that offer education to help you become a better trader. Oops, you keep using the wrong things here. And market information sources. Are you getting good quality information that, especially if you're doing fundamental research, make sure you're getting good information on the markets. Now, you got to be careful. A lot of people do like to trade news. The problem is the free news sources are slightly delayed. It seems like they're giving you the news right when the numbers come out, but they're not. For the most part, if you really want real-time news, you'd have to pay for an AP wire or Bloomberg terminal, and it's expensive. It depends on what you need for your individual business. Some people need those things, some people don't. You also have to make sure once you create the plan that you use it. If you've got a great plan, but you do not actually use it, it's useless. You got to follow it. And that's where having a mentor can help you out, because someone's holding you accountable and checking on you to make sure you're following your plan. Psychology, some basic things when it comes to trading are often overlooked. Something as simple as how you have your monitor set up. People don't think about this, but it really can be important. Most people, when they sit at desks, are looking down. That's going to make you feel sleepy, a little sluggish, a little depressed. A confident person is looking up, chin up, shoulders back, ready to go. If you raise your monitors above straight eye level, so you have to look up slightly to view your monitors, it'll actually keep you a little bit more alert and ready as you're trading. It's a simple little trick. Planning where to put your office in your space. Most people are working out of their house. Maybe you do have an office space, but if you're working out of your house, make sure it's not in a spot that's going to get too much direct sunlight that you're going to be burning up throughout the day and get sleepy. You might want to put it on the south side of your house. So that way north side. It would be on the north side. We're North America. So the sun hits the south side of the house and really cooks it. But if you're on the north side, you could still get daylight without getting overheated. There's some simple things, and figuring out what traps you, what triggers you to get frustrated or angry. And when you recognize that's happening, that can detract from your success in trading and cause you to make some bad decisions. We want to make sure that we're not burning ourselves out. I mentioned that one of my careers in the past, I was a hedge fund trader, and I started getting burnt out. It was high stress. So I decided to trade for myself. People ask me to trade for them all the time. And I say, no, I don't need the stress. I trade when I want to trade. I work when I want to work. So a plan, agenda items they stick to. Yeah, it doesn't have to be too complex. Basically, you just want to make sure that you have a guiding document that tells you what you're supposed to be doing when you come to your computer to start trading, and even before. And like I said, the document is just a bit of a guideline to help you create something as both a business plan and then an individual plan. So when you're putting this together, don't overwhelm yourself. Don't try to do every single thing all at once. Start working through the sheet. Again, focus on positive things to help you out. Make sure you decide what kind of risk and capital you're going to be putting to use. And maybe you don't sit down and complete the entire worksheet right away. You can divide it into sections and do it over a period of time as well. You're not going to be perfect. Okay. A lot of people try to perfect their plan. I always say that plans are written in pencil, not ink, because we do make changes. We have to be able to erase and change them. Obviously, they're done on computer nowadays, but we still need to make changes as we get better. But if people try to make everything perfect or never try to take losses, they're never going to trade. That happens. I've seen a lot of people go through education and workshops and webinars over and over again, without ever actually trading. And that's frustrating. You don't need to be perfect. You need to be actionable. You need to follow your plan. Again, start simple and improve it. If you find something's lacking, maybe you add to it. The CMT, I don't know if it's actually helped with my trading. Working with other traders and mentors and experience in the markets was the most helpful part. Yeah. Nothing against the CMT, but it was a lot of theory and academic stuff rather than, I wouldn't say it's not application. It's application too, but I believe that personally, I gain more from being in the markets. The markets are the best teacher. They really are. They teach you all you need to know about yourself and about the market. Your cookie cutter that you use, it's not necessarily a cookie cutter. Again, it's something you put together. It's individual for you that you should be following on a regular basis and possibly changing. Again, just keep it simple. Don't abandon your plan the first time it gets to a loss. Things happen. We get losses. As I said before, it happens. We just have to figure out why we had the loss. Sometimes the market just didn't work out. If there's a problem with the plan, that's fine. Fix it. But don't do it after one or two bad trades. You might have to go through 30, 40 trades before you start to realize a pattern of something working or not working. Do not make changes while you're in a position either that affect that position. Okay. We want to make sure that we're making the changes when we're less emotionally attached to the markets. Once you have money at risk, you are attached to the markets. So again, if you're going to change your plan, have a regular review time that you schedule to take a look at your plan and make sure you're following it and make sure that you're not doing it when things seem hopeless, when you're doing badly in the markets. Okay. Take a break if you need to, reset your brain and get back to trading. I said this already. We don't want to be overcomplicating things. Find what works best. Peter Lynch, I think, once said, you should be able to describe your trading strategy in 3 sentences, and you should be able to teach it. I think he said to an 8-year-old. It should be that simple. I put it 12-year-old. But if it's too complicated, you're not going to follow it either. Guaranteed. Common things that come up. What if you don't have a lot of money? That's fine. There's micros. There's a lot of things you can do, even with limited capital. I believe that it's only $2,000 to open a TradeStation account. But again, the principles for trading are the same no matter what capital you have. And there's a lot of different micros and different things that are out there that you can trade. Start small anyway, even if you do have a lot of capital, to make sure your trade strategies are working properly. Many successful traders started with a lot less money than you would think, and they built up over time. Again, it's not about getting rich quick. It's about building consistency and generating income over a long period of time. Before you make any major changes, give it a bit of time to see what's working or not. It may be 50 trades, maybe you realize in 30 or 40 trades, but you need a good sample of trades to figure out what's working, what's not working. And again, 1 month of losses, that's a rough patch for sure. It is a bit frustrating, but it doesn't mean your plan is completely broken. And of course, if you have a trading partner or a mentor you can talk to, that makes it a little bit easier as well. But track how you're doing in your trades. It says if you got risk-adjusted returns are declining over a regular period, 3 months or so, then you might need to change your plan. It's not going the right way for sure. I like paper trading, but I also hate paper trading. Just so you know, the problem with trading in simulated mode, there's no risk. You act differently, even if there's only a couple dollars at risk. You act differently in the markets when you have actual capital at risk versus not. You can reset with paper trading. When you do start with real money, start small and build yourself up. You're trying to make a system that works right for you. And you can actually review your trades every day, but maybe only look at your plan once a month. Again, that's the overall business plan we're talking about. And if you have a bad week, don't change the overall plan. If you have a few bad months, there's a problem. And this has been said before, don't focus on finding the perfect strategy, perfect trades. Every trading system is going to have losses. You can actually be successful and make money with a 40% win rate. It may not be as great, but if you have the right reward risk ratios, you could actually do it. Now, consistency is what we want, and we want to be better than 50% if we can. Okay. But it takes time to find the right strategy and system that works best for you. So again, there's no guarantees. We're just trying to make good trades altogether. Let's just checking something here. Yeah, I'm getting into the actual trading plan now. So again, build your foundation, build your overall trading plan first. Figure out your business, how much risk you're willing to take, and how you're trading. Discipline, follow your plan. Okay, you're not trying to be right all the time. You're trying to be consistent, which could lead to profits over time. And they say a good plan executed consistently beats a perfect plan executed sporadically. So the second type of plan, let me get that one, because we had the business plan that I went over and talked about exhaustively, hopefully. Now we have the market opportunity plan. Oh, that was the wrong spot, wrong piece. There we go. And in the market opportunity plan that you can download has the instructions and several different strategies. It doesn't have every strategy out there. Okay. CFDs, that doesn't trade exactly the same way as options. So it may not, the strategy, your business plan, yes, it would work the same way. And as far as increasing your level, you'd have to talk to the brokerage about that. Talk to your rep at TradeStation to find out more. I believe, if you go to the TradeStation Options Education Center, there was something in there. I remember seeing it about your levels. So I'm not going to find it right this moment, but you can look on that page and find it. So this is the market plan, market opportunity plan. Again, instructions are there on the first page. And depending on what type of strategy you're doing, you go to that page. So let's say, I think which one did I create? Bull call spreads. Actually, no, workspace. I guess it doesn't matter. I could have used any of them, but I'll do the credit bull put spread. I can open a bunch of them. We'll put the link in. If you go back in the chat, Jesus put the link in, but we'll add it again at the end. So again, if I'm doing an individual long position, I put in the date, the underlying security, and if I'm bullish or bearish. So let's just go to OptionStation Pro. I'm not going to do the full steps that I would normally. Oh, come on. It's jumping around on me. There we go. And I happen to have the spiders open, so I'll just use that for now. And typically, if I'm going long on an option, I want to buy time. So I'll use September 30th, the quarterlies. And we are not going to use all strikes. So use maybe 10. And let's say we're bullish on the S&P. So right now trading about 606. Perhaps I want to buy the 605 call. I can click on that and do the analysis, of course. And right here, we can put in today's date, the underlying security. This is creating a track record for me. What you should be doing is when you download this, you can go ahead and save one as a master copy. Let's change this to a different name, but I can save it under, let's say, the date. So I do market opportunity options plan, and I just put the date in the beginning. And that way I've got a record of the positions I'm doing. And I may have multiple positions, obviously, per day. So if I need to, I can label them A, B, and C, whatever I want to do. I'm not going to do that right this moment. And I said I was bullish. Notice it switched from put to call because that's what we would buy as a single leg option. Long strike price, forgot what I picked, 605. And the premium natural is 23.27. Oh, that's the wrong one. Got to pay attention to what I'm doing here. So I put in the premium. The expiration, that's what I was supposed to do there, is September 30th. There we go. Number of contracts. Perhaps I want to do 5 contracts. And it's calculating the premium I'm going to have to pay. And it's showing me my break-even price. It even does a nice little risk profile for me right here. Yes, you get a lot of this on TradeStation as well. If I go to analyze for the position, it'll give me my risk profile. Oops. Yeah, there it is. And a lot of information as well. But I can go ahead and, again, detail what it is I'm doing in this individual trade. Where am I putting in my stop loss on the underlying security if it breaks a support level? What kind of loss would I have if that stop is hit? Now, in order to figure that out, I have to do a couple things. First, let's say I go to my chart, SPY, and again, I'm bullish. This is just hypothetical because I'm not doing any analysis at all. So I wanted to cancel. Trying to delete that. There we go. So I was doing the 605s at the money, but let's say this was at support level, and if I'm wrong, I want to get out at whatever price level this is. Say that's my support at about 595. I can go and use the price slice. I could add in extras, whatever I need to do. 595. If that's where my stop loss might be, say we plot it out to a certain time. There we go. I would lose roughly $1,303 at that area. Now, keep in mind, these are going to be estimates, and I'm going through that kind of quickly, but all I did was put in a price slice. if prices move down to $595 in, I guess it's about 40 or 50 days or so, I would lose roughly $1,300. I will not keep this long position typically when there's less than 30 days until expiration, because I don't want the time value to hurt me. So stop loss price, I forgot what I said. Oh, $595. Potential stop loss if it is hit, $13.03. I don't have to put the cents in there if I don't want to. My target price, obviously buying a call has infinite potential reward, but we're not going to get that. This price is likely to go up a certain amount. And let's say I had a target of 625. I'm expecting to go there. Again, I can go to price slices, add another one, and put in 625. If it happens by a certain time, my profit, oh, that's not good, $510. I need it to be a much bigger move. Watch what happens. My reward risk ratio is only 0.391. I typically strive for a risk reward ratio of 3-to-1 or better. So obviously that would not necessarily want to be my target price at $625. I can put in why I'm taking this position, what's making it positive for me. And of course, if there's any dangers that I might be running into, this helps remove some of our bias when it comes to trading. If we're looking at potential losses, how we would lose, what would cause us to lose? What's going against us in this position? We create a little more objectivity when it comes to our trading decisions. Let's see. The price, oh, I didn't see exactly how much I'm paying for time decay, but the break-even price is simply the premium added to the strike price. That's your break-even. Okay. So where was I here? I'll keep going here with this. Let's say, where was I here? With the trade page on page. Come on. There we go. Bull put spreads. I brought up that workspace. Again, there's different workspaces that you can use. And this has a scan that we can run. Right now with bull put spread, that's a debit or credit spread. We might want high implied volatility. Unfortunately, nothing's fitting into the criteria right now. So let me go check the S&P 500. Oops, there you go. The easiest way to get a hold of us is to just email TradeStation. They'll forward any messages to me. I'm also on all the social medias. You can find me too. But right now, let's see, we've got, only one, Micron. So Micron is fitting some of the criteria as far as a bull put spread. Must have high volatility. Looks like it's pretty bullish. Might be overbought though. And obviously I would do some more research on the individual security. If I'm doing the bull put spread on Micron, go back to my options. Actually, before I do, I'll remove, that's why it's so high in volatility of releasing earnings. See, I told you I would do research on this. I'm just doing a quick example though. So if I'm going to Micron, again, as a bull put spread, perhaps, I would go through my analysis. I would know where I'm getting in and how I would know if I'm wrong, if it starts to go against me. And I could build a position. Let's get rid of that. I was still on, let's see, it didn't switch over. There we go. Still on the SPY, that's why. The different options scan workplaces are also in the Options Education Center. Each individual strategy on the page, if you go, this is the Options Education Center under Learn and explore option strategies. Each strategy has a workspace that has scans for it as well. So let's say I'm doing a bull put spread on 30 days left till expiration. And again, I would just do my analysis, figure out where I'm getting in, how much risk I'm willing to take. Just randomly picking these for now. So I'm selling the 126, buying the 123s. And the natural, try to split that perhaps and shave a little bit extra. So what we got? 80. Obviously, there's no guarantees I will get my price. I'll just make it an even dollar. Oops, wrong one. And go to the worksheet. Bull spread. Again, the date, underlying security. We are using puts, short strike. That's why I have multiple monitors, 126 and 123. So 126 for the short. And let me pull this off to my other screen so I don't have to keep jumping back and forth. There we are. So the 126 is a premium of $7. The expiration I chose was July 25th. The long strike, 123. The premium for that is $5.85. Although, again, that's $1.15. I'm probably not going to get that full because I was using the bid and ask. So I would look to see more honestly, what would I actually get? If I'm doing more than one spread, I could put that in. I'm just going to do one for now. and it's adjusting the break-even price for me based on the credit that I'm receiving from the option I'm selling. Again, as I'm doing my analysis, what informs my strike selection? I would be looking for, I call it demand. I don't trade support and resistance. I trade supply and demand. So I'm looking at institutional order flow and figuring out where are leftover orders, basically. So it's a little more complicated, but that's not too complicated, but that's what I do. So in this case, if I was basically in at 126 or above making profit, if we break below that level, I'd probably, again, I'd sell that option right around my support level. So perhaps I would get out and I can look again on the Option Station Pro price slices. So I bring this back over, analyze, and look to see how much would I lose. Let's say this drops down to 124.50 for my support level. Now, I'm not going to use the 0 DTE because I might actually hold it to then. But let's say we just go halfway through the trade because it's 30 days to expiration. Did that adjust right? Oh, no, it did not. I have another position I was analyzing. There we go. Let's close that. Got to be careful because sometimes it shows too many positions. There it is, 126, 123. So I would have a loss of $65. Okay. My target, again, prices don't go up forever. I'd be looking at my chart to figure out where is this likely to stall out on the bullish move. So let's say I expect it to go up to 130, 135. Oh, that's not a good profit reward risk. I'm picking wrong ones here. I might have to tighten my stop because my risk and reward is not good. Let's say 155, big move on price. It's a little better, 92 and 58, but it's not great. So my stop loss price was 124.50. I was going to lose like $55. My target price, what did I say, 145 or 155, I think. Yes, 155, $97 profit. And my risk reward ratio, actually, do I have to put negative 55 for that? Shouldn't have to. It is 176. So again, I would like to have a 3-to-1 reward to risk ratio for that. I would again list out the reasons why I'm taking the position, anything that might be dangerous that could hold and cause a possible loss. By being aware of that, I'm more likely to be objective, like I said. And you can do that for all the different positions in here. Again, long iron condors, short iron condors, iron butterflies, straddles, strangles, all that. So unfortunately, I've got to go. Hopefully I gave you some insight into that. If you got more questions, you can email. It's education@tradestation.com. They'll go ahead and forward the questions to the right people or to me if I can help out. Thank you for being here. And again, if you want more of actual practical trades, join and follow the options replay program. That's where we actually dive into individual trades and dissect them to see why we took those trades and how they ended up working or not working, and how to actually put the orders in on TradeStation as well, in Option Station Pro. So I want to thank everybody for being here. Thank you, Jesus, for inviting me. Yeah.
Thank you. Thank you, Brandon. That was a lot of information to digest, but good thing we have a recording and it's going to be posted on the TradeStation website. If anybody has any questions about where that is, please send us an email at education@tradestation.com. If anybody has problems downloading the worksheets or any problems with the worksheets themselves, just let us know. Okay. Thank you for being here today. Have a wonderful afternoon, and I look forward to seeing everyone in one of our future classes. Have a great day. Bye-bye.